Let's return to our lead story on the approval of the federal government's loan request by the IMF and the Senate today. I've been joined by the former chairman of the board of directors of the Nigerian Economic Summit Group, Mr. Kyari, to examine the implications of President Buhari's 850 billion naira loan request. Thank you for joining us tonight, and great to see you amidst the lockdown and the situation we're currently in.
Thank you very much.
So, first of all, two loans approved for the president, the IMF, the COVID-19 to fight the COVID-19 pandemic, and then the other from the Senate to fund the budgets. Are we on the right path borrowing? I know I said earlier this almost seemed like we're going back to the basics.
Exactly. We seem to be on a borrowing binge. Of course, that $3.4 billion from IMF was part of our own contribution. So I hope and pray that that comes with little or no conditionalities. Otherwise, IMF would basically be spearheading our economic future or determine it. That's what I understand. Therefore, it may be actually no strings attached type of loan. There is another nearly $3 billion that's still somewhere in there between Africa Development Bank and one other development entity. Now, we come down to this 850 billion. Now, the debt management framework or strategy that we've heard before was to borrow externally rather than internally for two reasons. One is crowding out of the domestic corporate borrowing or the private sector. Two is that the interest rates of external debts were much lower than what we see with T-bills then. So now that T-bills have crashed and the credit outlook for Nigeria is iffy, it made prudent sense to actually look for the borrowings domestically. So that might be the strategy that the government is taking. But debt is still debt. You would end up paying for it. And therefore, the key thing is, one, we need to apply it in a manner that is going to be more productive. If we are borrowing for productivity enhancing activities such as basic infrastructure, healthcare, education, then it will pay off down the road. If, however, we are borrowing to pay salaries and consumptive things, then hey, we are going to pay for it down the road, and we are going to be poorer for it.
Yeah, and I think that the government is accountable to the Nigerian people who elected these officials. But the DMO, the Nigerian debtman, it says the debt, the 850 billion naira, should not be seen as a fresh loan.
Well, it's no matter how you do the arithmetic, it means that you have. I mean, if, let's say, you're running your household and your salary cannot keep up with it, you need to go borrow. Now, if you're borrowing, whether it is new or an old one that you reached out for before, it will add to the debt service. And you remember that we did our budget this time. The Nigerian budget was submitted to the National Assembly in October. For the first time, the budget was passed very early in the new year. Now, that was an achievement. Unfortunately, the pandemic was not factored in. Therefore, the cutting of the budget by 1.5 trillion naira, plus the fact that the oil prices have come down, therefore those assumptions need to be adjusted. And when you adjust those, you would see that there is a bigger hole still left. So the deficit financing have to come in to take care of it. It is a good one that they went to the National Assembly rather than pretend that nothing is wrong, and then 6 months down the road, you find yourself not having enough money to spend.
Yeah, and it appears that all is focused now on combating the coronavirus. But what is the capacity then of banks and the banking institutions to absorb the borrowing demands of the federal government?
That's going to be the interesting thing that we are going to see. So I think the central bank need to look at monetary adjustment of some of the things that the banks have. For example, CRR effectively is still remaining at that official rate. And you talk to bankers, you find find that the real CRR that the central bank has quarantined, since we're in the season of quarantining things, is higher than the 22.5 or so percent that is officially there. So if that money can be released, then a lot can happen in the lending space. Mind you, the central bank still maintain that 65% loan to deposit ratios for banks. So banks still have to lend money, and with about maybe 40% or 35% of their money quarantined in central bank, that there is some gap or space left for them to do something that they can. Unfortunately, it's going to be a difficult one for the banking sector as well.
Yeah, and it appears we really can't get out of this without borrowing. But thank you again, Mr. Bukka Kyari, for speaking with us tonight. Do stay safe.
You're welcome.
As
Thank
you
you.
go back.